But let's get into the actual data, because remember, that's all I care about. I don't care what they say in the marketing material on the website. I'm sure it sounds fantastic. And I also don't care about what anybody posts on Twitter. That stuff doesn't mean anything. All I care about is what happens in the real world of live trading. And this is the performance of all of them head to head. So of course, we've got the S&P 500, the lowest drawdown, and then it progressively gets higher along the way. But let's just narrow first of all into this first comparison between SVOL and the S&P 500. Because unfortunately, right off the bat, we do have to say that under all circumstances, the S&P 500 is way better than SVOL. We can see here, the drawdown is lower, so the hedging component with SVOL isn't really doing much, and the rate of return is about twice as high. So pretty much SVOL is a non-starter. It's got 50% higher drawdown, but half the return. There would be no point in any circumstance to hold this. And it's even worse because it does worse in both market environments. You can see it draws down a lot more than the S&P. I guess that's to be expected. But it's also significantly worse during calm periods. You can see the S&P 500 performed way better during this calm period. So it does worse in drawdowns, and it does worse in stable markets. It has a higher drawdown and only half the performance. Plus, the dividend doesn't mean anything, so what is the point? And look, I get it. Again, the marketing material sounds great. It's a short vol product with a hedging component and a massive dividend. It's all good. Unfortunately, there is no possible way to hedge short volatility trades. You cannot, under any circumstance, buy and hold. Ever. Full stop. The reason for that is the short volatility trade itself and those VIX futures are very convex. In order to be able to hedge it adequately, in order to reduce that drawdown in a crisis, that also means that during all of the stable periods, you're just going to be bleeding capital. Most of the time, hedges just expire worthless. You don't need them. You only need them in a crisis. But you can never balance that out. You can never buy enough hedges to be safe in a crash and not have it cost you in stable markets. So again, not saying this to ruffle feathers, but obviously across the board, SVOL is just a non-starter.